Welcome to the second session of the lesson. I'm Vivian Mwapendima. Last time we were looking at the types of books of original entry, and we mentioned to say that there are 7 types of books of original entry. But today we are going to specifically look at the cash book. What is a cash book? A cash book is a book that is used to record all cash transactions of the business or in an organization. And the document that is used to record when we are recording the cash book is the receipt or the cash till slip. Okay? So the cash book it is in 3 types. There is a single column cash book, a 2-column cash book, and a 3-column cash book. A single column cash book is a cash book that either records cash transactions or bank transactions, whereas the 2-column cash book records the cash transaction, both the cash transactions and the bank transactions. Then the 3-column cash book records the cash transactions, bank transactions, and the discounts. Okay. So coming back to our lesson today, we are going to specifically look at the single column cash book, which records the cash transactions, and it is called the cash account. Okay, so we have here this example that we are going to look at today. So it reads, enter the following information into B Tembo's cash account for the month of January 2014 and balance it. So this is our task, and these are the entries that we are going to record in the cash account. So here is the format for the cash account. It has 4 columns. There are 5 columns of the cash account. The first column is the column for the dates in which the transactions has happened. Then the second column is the column for the details for that transaction which has happened. So we have the folder and the debit side where we record whatever the business has received, and the credit side where we record whatever the business has spent or has given out. Okay. So we are going to begin. So we have the first transaction which happened on 1st January. It states, started business with cash in hand 9,000 kwacha. So B Tembo started business with cash in hand 9,000 kwacha. So you come to the table, you record the date, the year was 2014, then January 1. So in the details we are going to write capital, because capital is the money that is used to start business. So this person started business, so this amount is going to be debited because B Tembo started business, and so it is going to be debited. It entered the business. January 3, we are going to write the next date here, January 3. What happened on January 3? Bought goods for cash 2,000. So the word that we use when we want to record the transaction where the business owner bought, we use purchase. So we are going to write that purchases. You bought goods for cash worth 2,000. And this amount is going to be credited because it went out of the business. So you write like that. You come to the next date. You read paid rent by cash. So B Tembo paid rent. We are going to write the date again on January 8th. He paid rent. We are going to write rent in the details. Then it means that B Tembo spent. So it is going to be recorded today on the credit side of the table. Then on January 10, we write the date again. January 10, what happened? Sold goods for cash. So the money came into the business. We are going to write sales. here in the details column. Then you record 3,000 on the debit side of the cash account. Then you have on January 17, here, January 17. What happened on January 17? Paid the salary expenses by cash. So in the details column, we are going to write salary expenses. Salary expenses by cash. So this person paid, and so this amount is going to be credited. It is going to be recorded on the credit side of the table. You come again, you check on the details which have been given. You check. There was another transaction which happened on January 25. So cash purchases. You write purchases in the details side. Then you bring that amount. Whatever you purchase is going to be debited. Whatever you purchase is going to be credited. It means that the business spends. So you write that. Then you come on the last date of the month. You get that figure. You read the transaction. Bought motor vehicle by cash. So you write motor vehicle in the details column. So he spent, Bitemo spent. So it is going to be recorded in the credit side of the cash account. So we are done. So we've been told that we are supposed to balance off. So what do we do here? So I made a mistake. It's January 31st when he bought a motor vehicle. So you record the first date of the month, the last date of the month, and then in the details column you write balance because you want to balance off. Balance carried down. So you are going to add the figures. You add the figures for the credit side and the debit side. So you compare the two. Where you get the largest figure is the one that you are going to put in all the sides, the debit side and the credit side. Below, not in the line for the balances, but below. So when you calculate, you find that where the figure was large is the debit side. So I'm going to put, when we add here, we get 12,000. So we are going to put this same figure both sides like that. Then you are going to get this figure, the largest figure. You subtract the figure that you get on the credit side of the cash account. Then the difference is 4,450. That's the difference. Then we are going to record it even in the balance for that is brought forward. Balance brought forward. Then you put the next date, February 1. This is the money that was not spent, that remained in the business. So this is done. This is how we record the single column cash book.